Many new traders believe that a secret indicator or a magical strategy is the key to unlocking consistent profits in the Forex market. They spend countless hours and often a lot of money searching for that one perfect system that will guarantee they never lose. But the truth is much simpler and also much more challenging. The real secret to success in trading doesn't live on your charts. It lives inside your mind. Your mindset is the ultimate tool. It is the foundation upon which all successful trading careers are built. Without a strong and disciplined mind, even the best trading system in the world will ultimately fail to produce the results you desire. Discipline is the bridge between your trading goals and your actual achievements. In the world of Forex, the market will constantly present you with opportunities to break your own rules. It will tempt you with what looks like an easy profit, or it will scare you into closing a good trade too early. Discipline is the quiet force that allows you to stick to your trading plan no matter what. It means you execute your trades based on your strategy, not on a sudden feeling or an impulse. It's about doing the right thing over and over again, even when it feels difficult or boring. This consistency is what separates professional traders from the crowd. Think of yourself as the pilot of a sophisticated aircraft. Your trading plan is your flight path, carefully calculated before you ever take off. The market is the weather. It can be calm and predictable, or it can suddenly become a raging storm. Your emotions are like a distracting passenger shouting conflicting advice in your ear. Discipline is your commitment to trusting your instruments and following your flight plan, regardless of the turbulence outside or the noise inside the cockpit. It is the steady hand on the controls that ensures you navigate the market safely and reach your destination without crashing and burning along the way. So the first step on your journey to becoming a successful trader is not to master the market, because you never will. The market is a force of nature, vast and unpredictable. Your first and most important task is to master yourself. You must build a mental framework that can withstand the pressures of uncertainty. You need to accept that you cannot control what the market does next. However, you can always control your own actions and your reactions. This realization is the beginning of true trading power. It shifts your focus from the external chaos to your internal sense of order and control. In the trading arena, two powerful emotions constantly lurk in the shadows, waiting to sabotage your best efforts: fear and greed. Fear is a paralyzing force. It can manifest as the fear of losing money, which might cause you to hesitate and miss a perfectly valid trade setup that your plan identified. It can also appear as the fear of missing out, or FOMO, pushing you to jump into a trade late, long after the ideal entry point has passed. Fear makes you second-guess your analysis and abandon your strategy at the worst possible moment, often leading to the very losses you were trying so hard to avoid. On the other side of the emotional coin is greed. Greed whispers tempting promises of extravagant, life-changing profits from a single trade. It encourages you to risk too much capital on one idea, ignoring your risk management rules. Greed convinces you to hold on to a winning trade for too long, hoping for just a few more pips, only to watch in horror as the market reverses and turns your profit into a loss. It's the voice that says, "This one is a sure thing," causing you to abandon all logic and discipline in pursuit of a fantasy. Greed is just as destructive as fear, as it leads to reckless decisions and catastrophic losses. These two emotions often work together in a destructive cycle, leading to a third dangerous behavior: revenge trading. This happens after you suffer a loss, especially one that you feel was unfair or that resulted from breaking your rules. Your ego is bruised, and you feel a powerful urge to get back at the market and win your money back immediately. Revenge trading is trading based on anger and frustration. You throw your plan out the window, enter trades impulsively, and often increase your position size, desperately trying to erase the previous loss. This is like trying to put out a fire with gasoline. It almost always leads to even bigger and more painful losses. Understanding these emotional traps is the first step toward disarming them. Every trader, from the novice to the seasoned professional, feels fear and greed. The difference is that successful traders have learned to recognize these feelings when they arise. They have developed the mental discipline to acknowledge the emotion without acting on it. They understand that their feelings are not reliable trading signals. Instead, they let their predefined, tested, and trusted trading plan make all the decisions for them. They operate from a place of logic and probability, not from a place of emotional highs and lows. So, how do you actually build the mental discipline to overcome these powerful emotions? The most effective strategy is to create a detailed and mechanical trading plan before you ever risk a single dollar. Your plan must be crystal clear. It should define exactly what constitutes a valid trade setup, where you will enter the market, where you will place your protective stop-loss order, and where you will take your profits. By defining every single rule in advance, you remove the need for in-the-moment decision-making. When a trading opportunity appears, you don't have to think or feel. You simply have to execute the plan you already created in a calm state of mind. Another simple yet incredibly powerful technique is to practice mindfulness and deep breathing. When you feel fear, anxiety, or greed creeping in, step away from your screen for a few minutes. Close your eyes and take several slow, deep breaths. Focus only on the sensation of the air entering and leaving your lungs. This simple act can break the emotional spiral and bring your mind back to the present moment. It creates a small gap between the emotional impulse and your action, giving your logical mind a chance to regain control. Making this a regular habit can dramatically improve your ability to remain calm under pressure. Proper risk management is not just a financial strategy, it is also a psychological tool. When you only risk a small, predetermined percentage of your trading capital on any single trade, typically 1 to 2%, you emotionally detach yourself from the outcome of that trade. You know that if this one trade is a loser, it will not significantly harm your account. This knowledge liberates you from the fear of losing. It allows you to focus on executing your strategy flawlessly over a series of trades, knowing that your long-term success is determined by the quality of your system, not the random outcome of any individual trade. Finally, keeping a detailed trading journal is essential for building emotional discipline. After every trade, win or lose, write down why you entered it, how you felt during the trade, and whether you followed your plan perfectly. This process forces you to be honest with yourself and to confront your emotional patterns. Over time, your journal will reveal your weaknesses. You might see a pattern of closing winning trades too early out of fear, or holding losing trades too long out of hope. Seeing these patterns written down in black and white is the first step to consciously correcting them and building a stronger, more disciplined mindset. In Forex trading, losses are not just possible, they are an unavoidable and normal part of the business. No trader wins every single trade. Even the world's best traders have losing streaks. The key to long-term success is not avoiding losses, but developing the resilience to handle them correctly. A resilient trader views a loss not as a personal failure, but as feedback from the market. It is simply a business expense, like the cost of raw materials for a factory. Embracing this perspective is crucial. It allows you to move on to the next trade with a clear mind, free from the emotional baggage of the last one. Building a positive and resilient attitude starts with how you define success. If you define success as winning every trade, you are setting yourself up for constant disappointment and emotional pain. Instead, redefine success as flawlessly executing your trading plan over a large series of trades. Did you follow your rules? Did you manage your risk correctly? Did you take every valid signal your system generated? If the answer is yes, then you had a successful day, regardless of whether you ended with a profit or a loss. This shift in focus empowers you and puts you in control of your own success. After a losing trade, it is vital to have a process for recovery. Instead of immediately jumping back into the market to seek revenge, take a planned break. Step away from the charts, go for a walk, listen to music, or do something you enjoy. This allows the negative emotions of the loss to dissipate naturally. Later, when you are calm, you can return to your trading journal and analyze the trade objectively. Was it a good trade according to your plan that just didn't work out? Or did you make a mistake? This analytical approach turns every loss into a valuable learning opportunity for the future. Ultimately, becoming a successful trader is a marathon, not a sprint. It is a journey of continuous self-improvement and mental fortitude. You must cultivate the belief that you are capable of following your rules and that your trading edge will play out over time. Celebrate your discipline, not just your profits. Be patient with yourself and with the market. By mastering your mind, embracing discipline, and building an unbreakable resilience to losses, you are not just learning to trade. You are transforming yourself into the kind of person who can achieve consistent success in any field that requires focus, patience, and emotional control.